Good morning, folks. This is the Danielcode Gold Weekly Bulletin for the 21st of October. We've had a interesting move down in gold during last week, but it's still well contained within the trading range that we have been thinking it's going to maintain for a while. Let's now visit the charts to see where we are. The first chart we'll look at today will be the binomial chart of gold weekly, and you can see that gold is still trading well within that range of 927 to 766 that we intimated was the likely trading range almost 3 weeks ago now. The next chart is the Huey, the MX Gold Bugs Index, which many like to use as a confirming indicator of movements in the primary price of precious metals, gold and silver. And you can see that that one had a nasty week last week, heading straight down. Its failure point now is 270.12, 270.12 on the weekly chart. That means we'd need a close above, a weekly close above 270.12 in Huey to displace the existing weekly sell signal that's prevalent there. Let's now have a look at the monthly charts of these markets. The first one is COMEX Gold, the monthly chart. You can see that that's actually holding up very well. It's actually only down 23% from the March highs, and it bounced off its Danielcode number at 741 last month, and that low has still been maintained. If that low is broken at 741, there's significant chart support at 728, which is the old high from early in 2006. The chart after that is silver, which is now down 55% from its March highs. For those of you who've been in the buy and hold camp, or who've got brokers or advisors that espouse the buy and hold strategy, you should be waving this under their nose and telling them that if that's all they can tell you, they should keep their advice to themselves. The next chart is the monthly chart of Amex Gold Bugs Index, the Huey. You can see that that's down even further. That's just bounced off its Danielcode number near 190.87, and it's down 57% since March. Moving on now to gold. You'll recall that I was saying that because of the very wide range bar in gold that we had 5 weeks ago, we appear to be stuck in a trading range between 927 and 766. That makes the daily signals all the more important, because it'll be the daily signals that will determine our trading stance. And you'll remember that from last week's gold bulletin that we had a Danielcode TO3 signal on Thursday of last week just near 932, and that gave us that huge outside bar of $107 just for the bar on the Friday. Since then there have been no new TO3 signals, and the market's continued down, and it's now just holding above the Danielcode number at 776.90. For those of you who are members of the Danielcode, make sure that you're checking the TO3 page to see when there are signals for silver or gold, and remember that those signals are valid for 2 days. The likely proposition for gold is that even though it's holding quite well, with Huey and silver both determinedly sticking to sell signals, the risk for gold is still to the downside. We have all sorts of anecdotal stories of hedge fund liquidations, shortages of gold bulletin, the usual stories that of great interest, great for cocktail chatter, but absolutely no use at all for traders. We simply take our signals as they come, and at present gold is on a daily and weekly sell signal, so we're expecting lower prices unless a buy signal reverses that. Whether there's a buy signal or not on the daily charts is a matter that will be known to the Danielcode members, and I invite you to visit the Danielcode to learn more about the opportunities for gold and silver trading that we provide.